With massive layoffs in nearly every sector, weakness in manufacturing, car sales and housing, and the biggest one-month decline in the trade deficit since the financial crisis, the economic picture is not looking good, which might explain why so many billionaires are loading up on gold, including hedge fund manager John Paulson and real estate mogul Sam Zell. Bottom line, now is the time to own gold, which is why the experts at Stansberry Research just stepped forward with a major gold prediction, arguing gold could soar as high as $3,000 by the end of the year, possibly even higher. You can find out why and get instant access to their #1 gold investment today. It's not bullion, an ETF, or a mining stock, but in the past, this gold strategy could have made you nearly 50x your money. Considering how quickly the price of gold has been moving in recent weeks, you don't want to waste any time missing out on the gains these experts believe are in store for this gold stock. To get a copy of his new free report with all the details, simply go to goldmaniareport.com. Again, that's goldmaniareport.com for a free copy of his new report. Hi, this is Daniela Cambone, and welcome back to the Daniela Cambone Show on Stansberry Research. We are catching up with Kevin O'Leary, star of ABC's Shark Tank. Kevin, always good to be with you. So nice to see you.
Great to be here. Thank you so much.
Yes, so many topics I want to bring up with you. Obviously, we're speaking ahead of CPI, PPI, minutes from the FOMC. Any big surprises we can expect, Kevin?
I think most of the market participants and pundits are at the place where they think the Fed is nearing the end of rate hikes. Now, whether there's another 25 basis points in the May meeting, whether there's a further 25 after that, another 50 basis points, yet to be determined. I'm now moved into the camp where I would like them to pause for 3 months. And I'll tell you why I say that. I've noticed that rent in most cities outside of the coastal region has rolled over 20%. Not yet reflected in the CPI data, the way that CPI is calculated. That's a mistake, should be fixed, because that's very anti-inflationary. So right now the CPI says we're at 6.1% inflation. I think the truth is we're more near 4.5%. But the one that's bothered me the most since you and I last talked is the data I'm getting from my own CEOs in mid-cap and small-cap companies. Liquidity for loans has completely dried up in the last 2 weeks. And I'll give you an easy way to look at that. Let's say you're a company doing 50 million in sales, 100 employees. At any one time, 60 to 90 days of your sales are tied up in receivables with big box retailers or whoever else you're selling to. And you used to be able to factor that, in other words, turn it into cash for about 7 to 9%. Today, those rates have gone from 17 to 29%. All in a matter of about 20 days as a result of what's occurred with the Silicon Valley Bank meltdown and the concerns regional banks now have about liquidity measurement. So that is in itself doing the Fed's work, and I would very much like the Fed to look at that data from senior loan officers as soon as they get it, because there's a big problem brewing here.
When you say big problem brewing, what is the main danger you're seeing as the outcome?
You can't get any capital. You can't raise money anymore from a regional bank because regardless of whether the Fed guarantees the loan or not, the loan officer is saying, we know it's going to get tighter. We know regulation's coming. We're going to wait and see what occurs in addition to rate hikes, which make it even harder to be profitable. I think we have a real soul searching to do in America about how many of these regional banks are going to survive and how many people want to support them in perpetuity, regardless if they're ever profitable again. And so this transition will reflect itself in loans to small and mid-cap businesses, which represents 70%. That's 70% of the economy. And I think the Fed's work is done. I think they're going to have a lot of anti-inflation pressure by the fact that they're going to slow business down because they can't borrow money.
Well, what's your thesis, Kevin, on the regional bank front? I believe you don't think they're even going to exist anymore.
No, I think the market should be the market. I don't think we should guarantee every depositor in every bank everywhere. If we let the market be the market, there'll be consolidation There'll be super regionals that occur. We have 3,000 banks in addition to the money center banks. Maybe the country can run on 1,000 or 500 or 800. I don't know what it is, but I know there's no political appetite or voter appetite or taxpayer appetite to guarantee every single bank manager everywhere, because there's a lot of idiot bank managers that have been sitting around with free money for 20 years that don't know how to make money in rising rate environments and have no clue how to manage risk. Look what happened to Silicon Valley Bank. That's going to happen 10, 20, 30 more times. I have no interest in bailing them out. They're idiot managers. It's not my fault. Let the market get rid of them, and as it will. The market's good at doing that.
And maybe this is too big of a question to answer, but how did that even happen that we had these incompetent people in these positions? Where was the hiring process?
Well, I mean, obviously, you can ask about the board. You can ask about the San Francisco Fed in the context of the Silicon Valley Bank. The oversight was either negligible or not there. Obviously, this is a wake-up call to every bank board. And that also in itself is going to put a lot of scrutiny onto the balance sheets of these banks. And frankly, the only job you have as a bank manager is duration and risk. That's it. That's the only job you have. And if you can't do that, why are you a bank manager? Why aren't you fired a long time ago? At Silicon Valley Bank, they weren't even doing that. I have no idea what they were doing, but they weren't managing a bank. You could say the same thing right now about First Republic. Who wants to put their money there? Signature Bank's already gone. How many more are there? This conversation is not going to end anytime soon until the patina has been scraped through the system to find out who was not managing their bank and who shouldn't be managing their bank now. And I can tell you, taxpayers do not want to pay for that in perpetuity.
Well, do you think that wake-up call was heard? Are banks doing that now?
Well, you don't know. That's the whole point. The way it's manifesting itself in the way that I can measure is you can't borrow money. So credit has dried up completely. You can ask anybody that, particularly down at the regional level. And so as a result, that is going to slow the economy. You just don't know when and how fast.
Kevin, I know you've said you're never going to park your money in a bank stock ever again.
No, I won't. Why would I? The big banks are going to be utilities servicing the other 10 sectors of the economy. And who would ever buy the stock of a regional bank? You'd have to be crazy to do that. I mean, that's just a binary Las Vegas. Is it a zero? Or when does it go to zero? Those are the two questions you can ask yourself. Why would you buy that? But what's the point? What is the possible reason that the value of a regional bank is going to go up when there's crushing regulation coming?
Kevin, I want to circle back to the interest rate discussion we were having and tie it in with the recent report from the IMF. The World Economic Outlook just came out. And they said when inflation is brought back under control, advanced economies, central banks are likely to ease monetary policy and bring real interest rates back towards pre-pandemic levels. So are we just going back to QE? And what does this mean for the global economy? Complete speculation.
I mean, half the economy pundits think that rates are going to be cut by the end of the year, and half think they're going to be up at a terminal rate of 7%. The truth is nobody knows, and how fast the economy slows. And the remarkable situation we have that we've never had before is we're at full employment. Unemployment is under 4%. Now, that's never happened before in a recession, so you're going to need some massive event that gets everybody out of work. So I don't know how that's going to happen, and that's why you just don't know. I mean, clearly the best strategy now is to go buy stocks that pay dividends, that are high quality, have good balance sheets, less speculative, and the market's already done that. But to be completely out of equities now is probably risky as well, because if it's true that we're stalled out here on rate hikes, this is as good as it's going to get on treasuries, and it's still not beating inflation. And maybe the bigger issue is, what is terminal inflation? Maybe it never gets back to 2% again. Maybe it's more like 3.5%, 4%. All of these are unknowns, which is why these are difficult times in terms of what it takes to be a successful investor.
Exactly. And so getting back to your point, and I was going to wait for the end to bring this up, but let's talk about sectors you're liking. You're saying it's not wise to be completely out of equities. What else are you looking at right now in terms of your game plan?
Well, we've been shuffling money around from regional banks. You know, we run a pretty big private equity portfolio, venture portfolio. When we give out money to a company, we never used to ask them, where do you put it? But since the events at Silicon Valley Bank, part of what we're doing now is completely taking inventory of where our cash that we invested in these companies is sitting. And if it's in a regional bank, we're pulling it and putting it into a money center bank. We've been doing that for weeks now. I see no reason, no upside at all to put money, cash. I'm talking about cash. Why would you ever put cash in a regional bank? What could you possibly think would be a good idea there? Zero. It's crazy. So we've been taking it out of those banks. And by the way, I'm not the only person doing this. I don't have a kumbaya feeling about this. I simply want to protect my LPs, my investors from idiot bankers. And so the only way I can do that is to move it into the large money center banks. So I've opened accounts at Citibank. I've opened accounts at JP Morgan. We've moved a ton of money there because the chance of them going to zero is less than a regional bank. And by the way, this is why these regional banks are challenged. Maybe people aren't telling the truth, but try and find somebody that wants to put cash into a regional bank. Why would you do that?
Yeah, so you feel safe still being part of the banking system, keeping your wealth in the banking system, Kevin, or are you looking for diversification, things outside the system, assets outside the system?
Well, I've been doing that as well, obviously. Alternative assets, real estate being a big one. Not commercial real estate, but certainly residential. We've also diversified from a geographic basis. We've moved some money up to Canada because they have an oligopoly system of banks, less chance that they'll go to zero. We've moved our crypto under the OSC. Our best performing asset has actually been Bitcoin since January 1st, up about 80%. So there's lots of alternative assets, but where do you keep them? And that's the real question. So we've opened accounts in Europe. Diversification is the only safety you have. And so most of our cash is being held in money center banks. We've diversified in the Canadian market as well. We invest internationally. So now for the first time ever, I have to invest time and effort. I have my own cash desk now where we simply go back through every day and say, where's our risk? Where's the cash? And I'm not the only person doing this.
Kevin, I'm sure you've been asked this by your U.S. counterparts. If you do have your funds in Canada, are you concerned about funds being frozen, as we had seen during, the trucker protests in Canada? I'm sure you're getting asked this question.
Yeah, I think that was a huge mistake that Justin Trudeau made. I don't think he'll do it again. That was ill-advised. I've already talked about his management skills as the CEO of Canada. I'm sure there's a change coming, so I'm not that worried about it. The chance that the Canadians actually start doing that, the Canadian oligopoly banking system, I think is very low. They've learned their lesson. That was a very bad mistake. It tainted their brand dramatically all around the world. And so that's something banks have to look at. But when you use a person's bank account as a tactical weapon against them personally, that really hurts your country's brand. And I think Canada knows that now.
Kevin, you've been very vocal on the topic of employee retention credit. I want you to educate us a bit about this now. It's a tax credit for businesses that paid employees while closed during COVID. Most of the companies, small businesses, went to PPE, but you're saying it's not too late to get into employee retention credit. Why should small businesses be looking at this?
Well, it's a very timely topic because the IRS just yesterday announced hiring thousands more auditors. And so you have to think about what's going to be happening to individuals and small businesses in the U.S. Clearly, they're going to be audited more. So that requires you to take a lot more time to keep your records, in particular your payroll records, in pristine condition. Because when you're audited, it's data that saves you. If you have the information, people that get into trouble in audits do not keep their information in an orderly fashion. But there's something else about the IRS. Everybody thinks that they're your enemy. The tax code, everybody has to realize, is just, the two certainties in life. One is death and one is taxes. So you have to live with the tax code. But people that understand that you have to figure out a way to be compliant with the IRS also know they also provide you with some flexibility. I'll give you an example, because I have this in my own portfolio. Let's say you're a business and you owe the IRS $500,000 coming out of the pandemic. You can't pay them back, but you had employees in 2020 and 2021. Now, the IRS has unlimited resources to chase you, and they will. So you have to come to an agreement with them. Most people don't know this, but if you apply for your employee retention credits, and let's say you had 50 employees and you kept them on payroll in the first 4 months of or the first 4 quarters of 2020 and the first 2 quarters of 2021, you're entitled to a check of about $500,000. That's around $26,000 per employee. But the IRS isn't stupid. They'll deduct the $100,000 from you and send you a check for $400,000. But now you're clean. Now you don't owe them anything anymore. You still owe taxes on the $400,000 you got in the employee retention credit, but all of a sudden you've cleaned your books up with the IRS. So I think this employee retention credit, which is still available for the next 23 months, is going to become very, very important to businesses that are in the hole with the IRS. And there are millions of those companies. Millions of companies have not paid the IRS their tithe. Now the IRS is giving them a gift. It's like a box wrapped with wrapping paper on it saying, we can help you because we've got the employee retention credit as part of the program that you can get if you had W-2 employees. So I'm working very, very closely with all of my companies on this to make sure that they file if they're eligible. And for those that want to learn more, I've set up wondertrust.com. Anybody can go there. I'm on a mission for the next 23 months because if you're in trouble with the IRS and you owe them money, you've got to go after these credits.
Thank you for that, Kevin. I also want to just talk about global economics and politics for a second here. French President Macron has caused a stir by saying Europe has no interest in accelerating the conflict in Taiwan and should become a third pole independent of both Washington and Beijing. I think the bigger question, obviously I want to get your thoughts on Macron, but of this global move of countries moving outside the power of the U.S.
The only thing that matters for the U.S. is what is the default currency of the world, and secondly, who brokers the power. So those are the two issues that are at stake. Now, obviously, the world for a very long time has used the U.S. dollar as its default currency because it basically is the price of all commodities, whether it's gold or oil, right on down precious metals. And so I don't see that changing because nobody's going to take the Chinese yuan instead, no sovereign, not because the Chinese people are bad people, it's just that nobody trusts the Chinese government. So that idea is going to stall. Would I exchange my U.S. dollars for Macron euros? Not a chance in hell would I do that. Maybe I'd consider the Swiss franc, and I do hold a position in Swiss francs, but that's a well-managed country. You can't tell me France is a well-managed country. I think really the only country that holds up the euro, and everybody talks about this in whispers, but I'll just blurt it out, is Germany. Without Germany, there is no euro. So it's interesting to hear what he has to say, and I respect him as a politician, but it's irrelevant to me as an investor. These ideas are bankrupt. There's no way on earth anything's going to happen in the U.S. dollar. Now, regarding leadership in policy on defense, that's a different topic. Many people speculate that perhaps the Biden administration isn't being as tough as they should be. All of this will be debated. We are going into an election cycle that's starting remarkably early. That in itself is just politics. I care about policy. Now, I think Putin's very surprised as how well organized Europe and the U.S. got. I think we shouldn't be messing around with Putin. We should give them more money and make him come to the negotiating table because too many people are losing their lives. And he's not going to do that until he knows the war is lost. And so, he's a classic dictator. And the way you get those guys to the table is you say, look, you're going to end up like Mussolini if you don't solve for this because people are going to be hurting in your own country and they're starting to. Right. So you better start negotiating.
Just one more minute on this de-dollarization, because everyone's jumping on this bandwagon. Everyone's talking about it. Is it the death of the U.S. dollar? Just want to get more of your thoughts on it. I mean, is that just an improbable situation for you?
I've been listening to the death of the U.S. dollar since 1966. Every 2 years, somebody comes along and says, this is the death of the U.S. dollar. You only have to ask yourself one question. If you're a sovereign wealth fund, I don't care what country, Middle East country, Eastern and Western Europe, where is the majority of your wealth right now? It's sitting in the S&P 500, denominated in the U.S. dollar. Now, until that changes, there's no chance of another currency becoming the default currency of the world. People wanted to make it Bitcoin. That's interesting, but that's a speculation. That's not a currency. And so maybe a digitized version of the dollar although that's going to be stalled out by privacy concerns, I think. Maybe a private version of that like USDC. But the basic unit of conversion of wealth and storage of wealth remains the US dollar. Ask any high net worth individual anywhere on earth where they want to put all of their money. Nobody tells you the yuan. Nobody says the euro. Nobody says the British pound. Nobody says Brazilian currency, Venezuelan currency. It's all the US dollar. I tell everybody that has a concern with this, get over it. Where do you put your money?
Right. Okay. Just one more, because I find this fascinating, Kevin. So when we see the headlines that countries are dumping their US dollars, looking to do trade outside of the US dollars, you're saying that's a completely different conversation, doesn't lead to the death of the dollar.
What country says it's dumping their US dollar? Cuba, Venezuela, Brazil? Who cares? It's irrelevant. No one's dumping their US dollar that is a major trading platform, and everybody wants to trade commodities and goods and services in US dollars. That's why I always call this out. You know, who's saying this? Find me a sovereign
China,
wealth
Russia?
fund. Yeah, oh, great. Russia? Yeah, let me invest there. What a great idea. I mean, that's the whole point. That place is turning itself into an economic wasteland. What else can it say? They're not going to let them have any US dollars until he cleans up his act.
Okay, Kevin, finally, I wanted to bring up a report that has found that 7 in 10 parents with children age 18 or older have made or are currently making financial sacrifices to help their adult kids. Why did I think that you would have something to say about this topic? Should parents still be bending over backwards to helping their adult children?
No. Entitlement is a curse. De-risking your child's life, even though it may have some hardship in it during tough economic times, is absolutely the wrong thing to do. That is a curse. The dead bird under the tree never learned how to fly. Famous words from my mother, who gave me that sobering discussion when I graduated from college. She said, "You're on your own. No more help from mama here. Go make it happen. Good luck to you." Very important. And I did the same thing to my kids. If you have someone living in your basement and you give them no reason to move out and get a job, whatever that job is, that's on you. What a huge mistake. Now, I understand health issues. I get it. But an able-bodied man or woman that's being supported by their parents and letting them live for free in the basement, that's a very, very, very bad idea.
Finally, Kevin, this news item came out a few weeks ago, but I didn't get a chance to ask you about it. In regards to Trudeau and TikTok, as you know, the Canadian government has banned the use of the popular short-form video application on all government-issued mobile devices. I know that most of our clips have gone viral on TikTok. Your thoughts on this move? Was it a smart one from the Trudeau government?
I think for all governments, they should ban TikTok. But the way to solve the problem for the rest of the population is simply to do what the Chinese have done to other social media platforms. You know, they kick Google out, they kick Facebook out. The reason that there isn't an Uber giant there is they wouldn't let them build that business in China. They brought a competitor to do it instead that was domestic. We should treat the Chinese the same way and level the playing field and say, look, no problem. We're just going to do to TikTok what you did to Facebook. You can still own a piece of it if you want, but that'll be 49%. We'll let you go get bids from the market. The servers have to be moved to the United States. The ownership has to be American, just like you did to us in China. And all that source code will be on American servers. Then, like any other shareholder, we'll send you quarterly reports, and you can see how things go here in the United States of America with the American version of TikTok. Thank you for coming. Same story. They did the same thing to Amazon, and they let Alibaba become much larger instead. We need to play fairly with the Chinese. We should give them access the same way they give us access under the same rules. If they want to steal our IP, they can't get access to our courts and we can steal theirs. It's the same thing. It's now time to level that playing field. I've said this many times before. Every other attempt for the last 7 administrations, almost 100 years of China policy has not worked. I mean, what more evidence do you want? And so at the end of the day, let's give them what they appreciate, what they understand, and what they respect. The stick. The Chinese respect the stick. That's it. I've said it countless times. Give them the stick because they want the stick. Now's the time for the stick.
Kevin O'Leary, thank you so much for your comments on all these discussion points. Always good speaking with you. Thank you for being with us.
Take care. Thank you.
And thank you for watching. We'll have more great content coming your way, so be sure to stay tuned and sign up at DanielaCambone.com to stay on top of it all. That's it for me.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.